What's up, crypto fam? Welcome back to Bitcoin Bulletin, your #1 source for all things digital assets. Today, we're diving deep into the wild world of Strategy Inc., formerly MicroStrategy. This company is making waves, straddling the line between enterprise AI solutions and, you guessed it, becoming the ultimate Bitcoin vault. We'll explore how this dual identity is shaping its stock and the future of corporate treasuries. Get ready for a deep dive into the strategy paradox. Next up, we've got a Bitcoin price prediction that's got everyone talking. With the Fed making a surprise move and whales making big plays, BTC is targeting a jaw-dropping $120,000. Is this the start of a massive rally? We've got the charts, the analysis, and all the details you need to understand this explosive market movement. Don't go anywhere. Then, we're going macro. Renowned analyst Luke Gromen is breaking down why Bitcoin is the ultimate digital gold and how its lack of yield is actually its biggest strength. He's going head-to-head with the Ethereum staking narrative, so prepare for some spicy takes on value and risk in the crypto space. This is essential listening for understanding Bitcoin's core value proposition. And finally, buckle up because Arthur Hayes, the legendary former head of BitMEX, is dropping his latest bombshell prediction. Bitcoin could hit $1 million. We're talking yield curve control, Fed policy shifts, and a tidal wave of liquidity set to flood the crypto market. Could this be the future? All that and more, right here on Bitcoin Bulletin. Make sure you're subscribed and have that notification bell on. Strategy Inc.'s bold balancing act. Tech giant or Bitcoin whale? This company, once known as MicroStrategy, is redefining corporate finance by merging cutting-edge AI analytics with an aggressive Bitcoin accumulation strategy. Once a pure play in enterprise data analytics, Strategy Inc. still powers organizations with AI-driven insights, helping them untangle complex data. However, its true headline-grabbing move has been its relentless acquisition of Bitcoin, transforming its balance sheet into a de facto crypto vault. This unique fusion has made Strategy Inc. a focal point for discussions on whether public companies can effectively leverage digital assets as a long-term treasury strategy, sparking a new wave of corporate treasury experimentation across the market. The company's Bitcoin holdings now represent a significant portion of its market capitalization, making it the most prominent corporate Bitcoin proxy. Executives openly champion this strategy, even developing metrics like Bitcoin per share to directly link shareholder value to its crypto reserves. This bold approach, however, has drawn scrutiny, notably when S&P Dow Jones indices excluded Strategy Inc. from the S&P 500, signaling institutional caution towards companies with heavy crypto exposure. Despite this, major asset managers and pension funds are buying in, attracted by the prospect of regulated Bitcoin exposure. Don't go anywhere, the market's reaction to this bold strategy is still unfolding. Next, we'll break down a Bitcoin price surge that has analysts predicting a massive jump. Bitcoin rockets towards $120K. Fed rate cut sparks bullish frenzy. Bitcoin bulls are in overdrive as BTC breaks key resistance levels, with analysts pointing to a potential surge towards $120,000, fueled by a pivotal Federal Reserve rate cut and a wave of renewed market optimism. This dramatic upward movement follows a decisive break in support and a significant influx of buying pressure from large holders, often referred to as whales. This suggests that Bitcoin might be entering a powerful new bullish phase, potentially culminating in a significant price target in the coming days. The current price action is closely watched as it aligns with broader market trends and historical data. Bitcoin has surged past the $117,000 mark after successfully retesting the $116,000 level twice, a bullish indicator often preceding further upside momentum. This breakout has reignited optimism among traders, with many now setting their sights on $120,000 as the next immediate price objective. This rally coincides directly with the Federal Reserve's recent decision to cut interest rates by 25 basis points, lowering the federal funds rate. Historically, such reductions in interest rates increase overall market liquidity, which tends to benefit risk assets like Bitcoin as investors seek higher yields and alternative stores of value. The market sentiment remains strongly bullish, further bolstered by the UK's Financial Conduct Authority introducing new crypto regulations aimed at enhancing market stability and institutional confidence. However, analysts caution that volatility risks are never far away, with potential macroeconomic shocks or unexpected regulatory changes posing a threat to sustained gains. Traders are advised to remain vigilant and manage risk effectively, especially as Bitcoin trades near critical resistance levels. But is Bitcoin's price surge purely about Fed policy? We'll explore its digital gold status next. Plus, get ready for a prediction that could change everything. Bitcoin's digital gold advantage. Why no yield means safer value. Macro analyst Luke Gromen is making waves with his assertion that Bitcoin's lack of inherent yield is precisely what makes it a superior store of value, a concept he discussed on Natalie Brunell's Coin Stories podcast. Gromen argues that any asset offering a yield inherently carries risk, a point underscored by the dramatic collapse of FTX in 2022, which had offered attractive staking rewards. He draws a parallel to traditional bank deposits, explaining that the interest earned is not a risk-free return, but a reflection of the depositor taking on credit risk with the financial institution. This perspective challenges the narrative that yield-bearing assets are inherently more attractive for investors. His remarks come at a time when Ethereum proponents often highlight its proof-of-stake consensus mechanism and staking rewards as a key advantage over Bitcoin for attracting traditional investors. While some analysts suggest Wall Street firms will increasingly engage in staking and DeFi, leading to significant growth for Ethereum, Gromen maintains that Bitcoin's value proposition lies precisely in its absence of counterparty risk. For many market participants, Bitcoin serves as a crucial hedge against inflation, government overreach, and general economic instability. Gromen provocatively states that anyone prioritizing yield-bearing assets over Bitcoin might simply be demonstrating their Western financial privilege. This debate highlights a fundamental divergence in how value is perceived in the crypto space, one focused on passive income generation and the other on a robust, risk-averse store of value. The market's reaction to these differing philosophies continues to shape investment strategies. Speaking of bold predictions, get ready for a forecast that could redefine Bitcoin's future value. Next, Arthur Hayes reveals his astonishing target for BTC. Arthur Hayes predicts $1 million Bitcoin fueled by Fed policy shifts. Get ready for a bombshell prediction from Arthur Hayes, the former head of BitMEX, who believes Bitcoin is on the verge of a monumental surge, potentially reaching a staggering $1 million. This ambitious forecast is directly linked to anticipated shifts in Federal Reserve policy, particularly yield curve control, YCC. Hayes posits that if figures like Stephen Murrin, a nominee supported by Donald Trump, champion yield curve control at the Federal Reserve, it could dramatically increase market liquidity and alter investors' risk appetite. The core idea is that more relaxed monetary policies historically boost demand for riskier assets, including cryptocurrencies, positioning Bitcoin as a strategic hedge against rising inflation. He believes that the anticipated influx of liquidity from these new federal strategies will create an environment ripe for speculative investment in the crypto space. Hayes points to historical trends where expansive monetary policies have propelled digital assets forward, asserting yield curve control could send Bitcoin's price into orbit. He emphasizes that as capital flows into Bitcoin, it will solidify its role as a formidable hedge against inflationary pressures. This is further amplified by institutional investors beginning to reallocate their portfolios to include Bitcoin, with projections suggesting it could surpass $250,000 by 2025 if current trends persist. The potential impact of yield curve control extends beyond mere price speculation. It influences how investors reassess asset valuations. Hayes also anticipates a surge in decentralized finance, DeFi involvement as regulatory landscapes evolve, potentially through initiatives like the Genius Act aimed at enhancing stablecoin liquidity. This momentum could elevate Bitcoin's status as a premier risk asset, outperforming traditional equities and fixed income instruments. He stresses the importance of understanding past monetary interventions, noting that injecting liquidity during periods of declining interest rates has historically ignited speculative fervor in risky assets. From a $1 million Bitcoin prediction to the day's top stories, we've got it all covered. Stick around for our lightning round recap and full call to action. And that's a wrap on today's Bitcoin Bulletin. We covered Strategy Inc.'s bold dual strategy, Bitcoin's explosive rally towards $120,000 fueled by Fed rate cuts, Luke Gromen's digital gold thesis for Bitcoin, and Arthur Hayes' mind-blowing $1 million prediction. Don't forget to smash that like button if you found this valuable. Subscribe to Bitcoin Bulletin for more daily crypto insights. Ring that notification bell so you never miss an update, and follow us on all our social channels to join the conversation. See you next time.